Hello and welcome. Today is 1st of October. We're going to talk about what happened to the market this past week. It was another bad day on Friday. S&P 500 lost 1.5% to close at 3585. Nasdaq 100 lost 1.73% to close at 10,971. Now, the selling happened because there was a inflation report that came out. The Federal Reserve watches very closely. This is the PCE index. The core PCE index rose 4.9%, which was more than 4.7% that the market was expecting, and it was also at 4.7% last month. So this clearly shows that the inflation is still strong, and as a result, investors decided to sell more in the market. So if we look at S&P 500, so this is S&P 500. This is the hourly chart. So we'll talk about the hourly chart first, and then look at the S&P 500 in a higher time frame, and what are some of the levels we should be looking out for. So in the hourly chart, what we see is that there is this downward channel that it was trading in, and then it closed below that level, and then it was consolidated. It started consolidating with a downside bias. Now, what's happening is that it's now in a smaller time frame, it started to form this falling wedge right now. So if I just remove the channel right here, you can see that you can clearly see the falling wedge. So falling wedges are usually bullish setup. So it means that we might be able to see some kind of a relief bounce in not too distant future. So that's at least the setup. Based on the setup we're seeing, we can see that the momentum indicators are beginning to move higher on a smaller time frame. MACD, RSI has gone below the previous low. So some of these momentum indicators are slowly moving higher, creating a positive divergence in a smaller time frame. If I look at SPY on the hourly, you can see again, it has this downward sloping channel. It closed below this channel a few days back, and then started moving lower. It made an attempt to get back inside the channel, but couldn't hold on to it. So now it's been trending lower. So we've got this falling wedge developing in SPY also. If we now move to Nasdaq 100 on the hourly, you can see that Nasdaq is still within the downward channel. It hasn't gone below it, but within this channel, it is creating this falling wedge also. But it is trading, but it remains in a downtrend, and it could continue to slide down along the lower end of the channel. But we need to be mindful of this falling wedge, because falling wedges tend to be bullish. So we could see some kind of a relief rally, because we've had quite a bit of selling in a short time period. It is reasonable to expect some kind of a trading bounce, not a ultimate bottom, but some kind of a bounce. So we have to be prepared for that, because many of the indicators are really oversold. So some kind of a bounce looks like it's possible based on the fact that we're having a falling wedge development. If we look at QQQ, you can see the same thing. It's still within this downward sloping channel, but it has this falling wedge developing. So let's have a look at the indices on a bigger time frame, just to see like what sort of setup is happening. So this is S&P 500 weekly chart. So it helps us to see where things are and where we can go to. So at the moment, you can see that it's just below the weekly 20. the weekly 200-day moving average. So this line is the weekly 200-day moving average. You can see previously the weekly 200 moving average provided support right here. So it bounced off that level once, and then you can also see the weekly 200 acting as a support right there. So at the moment it is at the weekly 200. So this could act as a possible support. But what are the other levels that we should be considering? Next level is this level. This is there's a 0.5 fib retracement sitting at this level. So what it is that I have a fib drawn from the COVID lows to the highs which were set early this year. So this level 3500 is a 50% retracement of this move. So this usually is a big support area. So we could see some reaction at this level. Also, if you look to the left at this level, there's also quite a bit of weekly candles interacting at this level from 2020. So this area is an area of interest, and we could see some reaction at that level. Now below this level, the next area would be the pre-pandemic high, which is right here. So if I draw a line here just to see what that level is, so this level would be around 3400, 3380. So these are the levels that we want to be looking out for. So obviously the first level, which is the 200-day, I think it closed slightly below that level, but below this it's this level, the 3500, which is where the 50% retracement is sitting. This level is just 85 points below where S&P 500 closed. It closed at 3585, so roughly 2.5 to 3% more to the downside until it hits this level. And then below that level would be this level, which is the pre-pandemic high, and that's at 3400. Now below that, if it continues to move lower, it would be this level. This is where the 61.8% retracement is sitting. So this level is 3200. You can see to the left, this area also acted as a support and resistance previously. So this area would also be of interest. So 3500 first, 3400, and then 32. Those would be the levels to look out for on the downside. If we look at SPY, just to see what the corresponding levels are for SPY. So the SPY's corresponding level would be this one, the 50% retracement. So that's around 349. So that's this number. That's around 349. And then if it you can see it did have support and resistance in 2020. If this level is breached, the 349, then the next area would be the pre-pandemic high, which is right here, and this is this level is around just look it up, it's around 339, 340 area. So 349 first, and then 338 to 340 next, which brings us to the pre-pandemic, and then to the 618 retracement, which is around 318 level, 318, and you can see that there was quite a bit of support and resistance in 2020. So these two levels, the 0.5 fib and the 0.618 fib, these are important levels, and we could see some reaction, and in between you have the pre-pandemic high. So those are the levels that you want to be looking at if there is further pullback. If we look at Nasdaq 100, just to see what are some of the levels we should be looking out for. So for Nasdaq 100, the 61.8% retracement is this red line. So that's around 10,600. You can see that there was some interaction at this level right here. So that would be the first level of support, and beyond that the next level would be the pre-pandemic high. So the pre-pandemic high is around 9,700. So this level is around 9,700. So 10,600 first, which brings it to the 61.8 fib, and then to 9,700, which brings it to the pre-pandemic high. So those would be the levels of areas of interest if there is continuation to the move to the downside. If we look QQQ just to see what the corresponding levels are, for QQQ the 61.8 fib is at let's say 259. So that would be the 259. So you see some interaction here, and below that you've got the pre-pandemic high, which is around 337, 336, 337 level. So 259 first, and then 237 would be the next level, which brings us to the pre-pandemic. So those would be the areas to watch, and there could be some reaction, at those levels. Now, if we move on to the bond market, so obviously the bond market moved higher, which caused the equity markets to be under pressure. So we'll first look at the Fed funds futures, April 2023. That closed up 2 ticks to close at 4.447%. And then the March 2023, these two were primarily flat. It's at 4.4. So since reaching a high of around 4.7, they pull back a little bit. They're hanging around near where the Federal Reserve said they expect the terminal rate to be. Federal Reserve said the terminal rate to be around 4.75% by middle of next year, and then they're going to leave it there for a long period of time. So these two Fed funds futures, the March and the April 2023, are hovering around that level. Now the problem on Friday was the 2-year. So the 2-year rose 8 basis points to close at 4.28%. So last week it did pull back a little bit for a couple of days, and then we saw a move up again on Thursday and Friday, and that's basically put pressure. The Friday's one was after the PCA report. It traded in a negative territory before the report, but moved higher after the report came out. If we look at the 10-year was up 4 basis points. So it had this big drop on late last week, but then it started to move higher on Thursday and Friday. So the 2-year is at 4.28, which is where the Federal Reserve said the Fed funds rate would be by the end of this year. So it's hovering around at that level. But the recent report, Friday's inflation report, was showed that inflation still is a problem. The inflation, despite increases in interest rates, it hasn't had an impact in the economy yet. So some are beginning to now feel that Fed would remain aggressive, and it is entirely possible that the terminal rate that the Federal Reserve stated, 4.75, may even go up to about 5% or even 5.25. That's basically the current expectation based on some of the recent reports. But keep in mind that we're now in a new month, and we're now going to see new reports coming up. On Friday, we're going to see an employment report which would show how strong the labor market is. And then the week later, we're going to get the inflation CPI report for the month of September. So all these new data that comes in would provide some indication as to what happens to inflation, what happens to interest rates, so forth and so on. Moving on to the other markets, so let's look at dollar. So dollar continues to remain strong. So we've got this channel, dollar pull back a little bit from the top of this channel. So right now there is support at the middle of this channel. Now, even if dollar were to fall below all the way to the bottom of the channel, it will still remain in an uptrend. Only if it breaks that would break this uptrend. But there's no indication at the moment that that's about to happen. Dollar remained quite strong and in an uptrend, and it will remain so as long as the yields continue to move higher. So at the moment, there are no indication that the yields are about to go lower. That might change once the new economic reports come out. Related to dollar, gold remains in a downtrend. So we've got this channel that it's now trading within. So the middle of the channel is where it's going to find some resistance. There's also this downtrend. So until and unless we see gold break through the midpoint or this downtrend, we can't expect it to move to the the upper end of the channel. So we'll see how things develop, but it's clearly in a downtrend, and we'll see how things progress in coming days. Oil is also in a downtrend, so it's moving lower. Concern here is that there is expected now. There is a good chance that there would be a recession globally, and that's going to reduce demand for oil. And if so, then price of oil could remain under pressure for some time. So that's why you can see that it's been moving lower. You can see the momentum indicators are weak. MACD remains well below the zero line. RSI is below the 50 level. So at the moment there is no sign that at least the momentum indicators are weak. So if there is any rebound, that rebound is likely to be short-lived. Only if it breaks through this the upper end of the channel, we would expect a change in trend. Otherwise, it remains very much within a downtrend. If we look at VIX, VIX continues to be very high. It closed at 3162. So it's now kind of in the upper end of this channel. The 20 is on the bottom and 3750 on the top end of this range. So right now it's now near the top end. It's high. The momentum indicators are positive. So as long as VIX remains where they are, we can expect to see high volatility in major averages. So that's VIX. If we look at some of the indices quickly, this is XLK, the technology. So it fell below the mid-June lows. So clearly in a downtrend. Momentum indicators are weak. So there's no signs. And even if there is a bounce, the resistance would be to the uptrend line right here. Unless these momentum indicators start to cross over and move above the zero line, any rally is likely to be short-lived. XLY is a little bit better. It hasn't gone below the zero line, but remains very much in a downtrend. The momentum indicators are also trending lower. XLF. So XLF is kind of trying to form a base near the mid-June lows, but very much within a downtrend. The momentum indicators are also heading lower, so not seeing anything positive there. Even some of the defensive sectors are also coming under pressure. If you look at XLU, big drop in XLU. So that's an indication that this selling is widespread. There's nowhere to kind of hide. If we look at some of the individual stocks just to see how they are doing, we'll start out with Tesla. So Tesla has been trading within this range. So on Friday it closed just below this this range. It lost 3 points to close at 265. So the next area of support is this horizontal level, which is around 258. The moving averages, the momentum indicators are weak. MACD, it's about to cross below the zero line. That's not good. That's negative. RSI remains well below the zero level. So the momentum indicators are weak. So the bias is definitely to the downside. But I think Tesla is going to move along with the market. So if the market remains weak, we could see additional will pullback. But if there is a rebound in the market, we can see some bounce in Tesla as well. Apple. So Apple continues to head lower. It lost 3%. In fact, in the last several sessions, it's been really under pressure. So it's fallen quite rapidly. It held up quite well throughout this decline, but in the last 8 trading sessions, it's fallen back rapidly. It's broken below a number of supports. Support right here, support around 143. Now this is the next area of support, which is around 137. Below there is basically the June lows, and you can see the momentum indicators are quite weak. So, but it has fallen quite rapidly. If I just bring in the moving averages, you can see Apple has gone quite a bit below its moving averages, 20 and 50. So at some point, the moving averages act as a mean reversion. So at some point, we would expect it to kind of move up to get back to the moving averages. You can see right here when it fell well below the moving averages, it gradually crawled back towards the moving averages. So we would expect something like that happen because it has gone away from the moving averages. But very much remains in a downtrend. Any rebound is likely to be just a bounce. We need to see some structure, some base formation, which basically will tell us whether or not there's going to be some kind of a rally. But we're not seeing any kind of structure. It's just going straight down. If we look at Microsoft is again, along with the other big tech, it's moving lower. So we've got this channel right here. It's heading towards that channel. So we might see some reaction at the bottom of this channel. This channel acted as support previously. You can see there was some reaction here. There was some reaction. So if it does fall to this level, we could see some reaction. Now, it doesn't have to go all the way down. It could just, if there is a rebound in the market, it could bounce up a little bit. And then, if there's further weakness in the market, it can gradually. So this would be the level to watch out for. If we look at Nvidia, Nvidia is also just moving so we've got this channel. So it's moving down, moving lower within this channel. So at the moment, it's not showing any signs of a reversal, but it's very much at the bottom of the channel. It's not too far from the channel. One thing to note is that Nvidia over the last this year has fallen a lot. If I show you the weekly chart, you can see that it has fallen over 70%, and that's why on Friday what we're seeing that it's it didn't go down that much. It was down only 0.66%. Because it has fallen so much, I think it's beginning to kind of slow down the pace at which it's falling compared to the other big tech companies. But nonetheless, it remains in a downtrend. There is no indication that it's about to move higher. But noticing that the momentum indicators have begun to flatten out. So unlike other cases, you can see the MACD is starting to flatten out. RSI, it's not going down, it's now going sideways. So these are positive signs. As price goes lower, the momentum is not. So that's a positive sign. But it remains. It needs support from the overall market. If the overall market rebounds, we could expect some bounce. The midpoint of this channel would act as a resistance. If we look at Meta, again, Meta is also going down within this channel. Very much remains in this downtrend. There's no indication that the trend is about to change. We need to see it break above this upper end of the channel, but at the moment, no indication. But momentum indicators are flattening out, so that's a positive sign. So we'll leave it here. We'll see how things develop next week. Obviously, on a short-term basis, we need to keep an eye on this falling wedge, both on SPY and QQQ. This is an indication of some kind of a reversal, temporary reversal. So we'll see how things play out in coming session. Well, thank you very much for watching the video.